Time for us to take a look at what will happen in the first quarter of 2024. We will briefly touch on 7 topics for our discussion this time. Firstly, we will talk about the global stock market's performance year to date, and then we'll talk about the US interest rate outlook and our take on the global reserve currencies trend, then the energy price that is affecting a lot of the country's CPI, and also the artificial intelligence argument, how it impacts the stock market. We will have our takeaway after consolidating all the thoughts and do all the analysis by morphing. We will have our takeaway for the Q1, and as a result, we come up with our personal asset allocation. Global stock market performance, you can see from the chart that the US and Japan have registered a positive gain in local currency terms over 20% year to date. Compare with Asia Pacific, a decent 6.9%, and with Hong Kong, China, have a negative return from 8 to 14%. We see these data are strongly suggested risk-taking liquidity have flown back into the risk market, the stock markets, because of the imminent currency devaluation concern on the Japanese yen and the US dollar, and also the new liquidity from the fixed income budget, supposed to be buying bond, now they go back into the risk market, and also from the fixed deposit interest gain. So we will talk more about this in the later part. So as a result, we do not expect a collapse in the US and Japan stock market in the first quarter of 2024, and we expect a noting positive return in local currency terms for Asia stock market during 2024. Interest rate outlook for the US, we see there are volatilities and fluctuations for the 10-year Treasury. And we see the range would be around 4.5 to 3.5% during 2024. We do not expect a very sharp interest rate cut in the US, nor a big interest rate hike in 2024. The global reserve currency trend. There has been a lot of effort by the central banks to deplace the percentage of US dollar as their major reserve currency. According to the IMF report on May 2021, we see the peak of the US dollar as reserve currency in most central banks is 75% and has been since then dropped to around 59%. It seems the trend is going on. While we can see the US dollar index, that means how the exchange rate of US dollar going against with major currencies in the world, and we see relatively wild swing, but maintained in the last 12 months at a stable horizontal range. What we can expect is there are more rebound on other currencies like Japanese yen, Chinese yuan against US dollar. And we see that it's happening even with cryptocurrencies. The Bitcoin, you can see from the following chart that it has been rebound more than 150% year to date. And also we see the gold price has appreciated more than 11% in 2023. Regarding the energy prices, of course, crude oil price will be quite a major force driving most of the country's energy prices. And in US, we see because of the effort of increase their domestic production on oil and a lot of argument, discussion with OPEC, we see volatilities in the crude oil price, yet we see it has been centering around $72 as shown in the chart. We do not expect the price of crude oil will have a big jump because of the more relative balancing supply and demand situation we expected in 2024. Artificial intelligence has proven itself in improving immensely productivities. And AI will be the essential way for US to gain back economic competitiveness. So it will mean investment opportunities in US. And we see not only in US, but also in Europe and even in China, in Asia. So it is worthwhile for you to pay extra attention to the AI sector. We see there are a lot of opportunity that could be monetized, but you need to do more homework on that. Our takes for the Q1 2024, after seeing all these data, performance numbers, and after doing our analysis, the first take is the US interest rate using 10-year Treasury rate will be fluctuated at a range of 4.5% to 3.5% in coming quarter. And we see no big surge in the crude oil price and also the CPI in US. With the domestic buying of US government debt by the local liquidities, US exchange rate will not be as strong as in 2023. And we see more upside for gold, crypto, and other non-US dollar currency in the first quarter of 2024. Global equity markets generally will be supported by the current interest rate and the local liquidity. US equity market will continue to benefit from lesser capital outflow from US and a relatively weaker foreign exchange rate. Global push for sophisticated technology application will continue, such as AI, artificial intelligence. It will continue aiming to gain economic competitiveness. And we will see these moves will provide monetization or investment opportunities for investors. After all the analysis, data compilation, and our strategy formulation process, we have come up with our asset allocation decisions. Basically, we have adjusted down our fixed deposit and high-grade bond allocation from 65% to 60%. We also adjust down our cash portion for bottom fishing from 15% to 10%. We maintain our risk assets allocation, risk assets with yield to 20%. And we have put the cash into risk assets without yield category, which is something new, and we want to explore opportunities in the sophisticated technology application and monetization process, such as application of artificial intelligence in production. That's some point that you need to take note. And overall, we have increased our risk appetite. Wish you all the best in 2024. Wish you a very great investment journey in 2024. No guarantee to make profit. Profit will not come easy. Always keep alert to the risk that you can take. Thank you for your support and talk to you next year. Thank you.